we are the new kid on the block in terms of Kingsley. Thank you very much, Ivan, for inviting us down. It's with the support of people like Tom, who's been down to site, had a look at us, and I think we're your favorite kid. What Northern Empire is in the last year, we've transformed the company. It used to be a grassroots exploration company focused on assets in Alaska. I joined the company and I took the steering wheel and gave it a hard turn and transformed it into an advanced project company based in Nevada. A lot of reasons for being in Nevada. It is obviously a good jurisdiction. It has all the pluses that everybody knows about. Also, the deposits generally are, the more attractive deposits are what they call heap leach. So they're less energy intense and capital intensive to process. So the advantage of that is we get to work with a lower grade resource and still be able to make the sorts of returns that the other companies are forecasting. Forward-looking statements, we'll skip over that. Philosophically, what attracted Northern to the Sterling project? We, as a management team, are businessmen. We are geologists, a lot of us by training, but we do like business, and so that's one of the key things. And we had a fairly hefty criteria that we went with, and it was obviously the grade was a key component of it. It's 2.57 grams per ton from the Sterling mine, which is a past producer, so low technical risk, and that mine is permitted for production. So it is really a mine that economically can drive the ball out of the park. We've also taken a lot of the risk out of the project by it being past producers. You know how the ore is going to perform because it's done it before. Also, the jurisdictional risk, we like Nevada. It's someplace that you would take your kids. How could we get this? This was an asset held within Imperial Metals for 40 years. Various groups had approached Imperial about buying it. It was the strength of the management team. I had identified the asset about 6 years ago, so perseverance is also a key factor in mining, and I had a look at it. But the management team was experienced in Nevada. It was largely myself and Doug Hurst, and we were able to do a financing in a very tough time, raise $20 million and get the asset purchased done. One of the things that particularly the executive chairman, Doug Hurst, and I had a lot of time to think about was to design a junior mining company to be profitable. We've talked to everybody about different aspects of what makes a good junior mining company, and we were designing the company around that and around our experiences. Obviously, it's the team. If you look at our board, which we'll discuss, you've had people that have hit the ball out of the park. And when I say out of the park, we're talking out of the park. The jurisdiction. We wanted to work in a jurisdiction that we'd be comfortable working in. It's rule of law. It's something that is an area that has been familiar with mining. This is Nevada. I was asked this question earlier today, how does Nevada rank as a mining jurisdiction? Are there a lot of mines there? If Nevada was a country, it would be the 8th largest gold producer in the world as a country. So that's how it ranks. Again, all of the big companies, obviously Barrick is in there, Newmont, Kinross, the big 3 gold producers, they all have operations in Nevada, and it's a very stable jurisdiction to work in. The other thing that you look for is an asset, and that's what attracts both the investor and the liquidity event and makes it something that is a mine that can be developed. You want a high-grade deposit, and grade is relative given your area. You sort of have to be regionally sensitive. Obviously, what the Dalridian has got in Ireland, that half ounce per ton underground is spectacular. What the guys are doing in Quebec is good. We're lower grade, but we're also lower cost. And that makes it an attractive asset. And we also have lower technical risk. Because of the understanding of the deposits, because these are past producers, you have a lower technical risk. Also, in terms of the company, we need to be thinking about our capital structure and be able to return returns to shareholders, so we don't dilute the company. We're at the stage right now with Northern Empire. Often when I meet an institutional investor, they look at where we are in terms of our development. We're a permitted asset. We've got resources done, and they say, well, you should have a share count of 200, 300 million shares out. But we were able to do the acquisition and finance the company at a very decent price, and have subsequently done accretive financings to preserve our capital structure, so it's more value in the ground per share. Talking about the team, just look at the track record here. So Doug Hurst, who is the executive chairman, founded International Royalties and Newmarket. Those two companies were taken out by seniors, and they returned $1.7 billion to shareholders. Kamenak was founded by John Robbins and Jim Paterson. That returned $500 million to shareholders. And this is actually also recent. It's a time-sensitive thing as well. The remaining board, Daryl Carty, Jeff Sundar, and Adrian Fleming, did the Underworld transaction. They sold what was called the White Gold Project to Kinross back about 10 years ago now. In an amazing coincidence, I used to work with Adrian at a place called Hope Bay, and the Underworld transaction financed my wedding. Which was a good investment. Talking about jurisdiction, Nevada is probably the best jurisdiction in the world for mining. Again, it's a place that you would take your family on vacation. We're about a 2-hour drive outside of Las Vegas. If you've got young kids, you probably don't want to take them there, but if you've got teenagers, they might have a good time. Nevada is obviously it's in the U.S., it's a stable jurisdiction, and it's a mining-friendly state. As I said earlier, if this was a country, it would be the 8th largest gold producer in the world. There are numerous mines in the state of Nevada. When we go and meet the regulators and we talk about, okay, we're going to permit an expansion at the Sterling or new deposits in the northern part of the project, they kind of go and they just sort of shrug their shoulders and say, okay, so it's another one. All over the state, there are many mines. We have what are the significant trends in the state of Nevada: the Cortez, the Carlin, and this is the Walker Lane, which we're at. And this is a small sampling of some of the mines that are active in the state of Nevada, so you get a sense of what the regulators are familiar with. It is, yeah. Well, actually, historically, the Sterling mine, if you ever knew of it, it's been around since the 70s. It was an underground, but it's going to transition to an open pit. Going forward, talking about the asset, I mean, the saying is that we've touched on, grade is king. And when you compare us to other assets in the western U.S., we've got 4 deposits, and they're all in the upper quartile of grade versus our peers. So that will obviously start to speak to the amount of tons that you need to move to make an ounce of gold.
So this big question, why did the people give up to sell you that project?
That's actually there was an opportunity that was created for this. We bought the asset from Imperial Metals, and if you know of Imperial Metals, they're a Canadian copper miner. What happened with Imperial Metals is they had a tailings disaster. It's called the Mount Polley tailings disaster. It happened on August 4th of 2015. It is a disaster in the fact that there was a breach. It's not as bad as it could have been. The material that went into the lake was relatively benign. But that stressed their balance sheet. They were in the midst of a mine build when that happened, and they went from a position of we are a $17 stock to we're a $4 stock overnight. Their single largest shareholder wrote a check for $300 million to fix it. Their balance sheet was stressed. They had $600 million of debt. And one of the other things that you need in a junior mining company is a bit of luck. One of my directors has a friend who knows the single largest shareholder of Imperial Metals, and we were able to have a very quick conversation, say, we'd like to buy the Sterling asset from you, and his response was, for 10 million bucks American, it's yours. Okay, we're done. We're on our way, and that's how it happened. Good question. Yeah. This asset was something within Imperial that was an orphan. They are a Canadian copper company. A Nevada gold thing was something that was just sort of lost in them. I knew of this just from my time in Nevada. I actually also had a look at 400 different assets, and this is my second acquisition out of that list. Going back to where we were, the upper quartile grade gives you an opportunity to get into that lowest quartile costs. One of the other advantages of our project is that it is open pit, so your cost per ton moved is a lot less. And also the metallurgy is excellent, and so with some of the other projects that you see in the world, there's mills that are involved. We recover the rock by heap leaching, and literally we can put a rock onto a leach pad 24 inches in diameter, and we can get 88% of the gold out of it in 30 days, just by sprinkling solutions on it and then being able to recover the solutions out of the bottom of the leach pad. So all of these things put into a place where you've got good access, good permitting, lowers that technical risk.
Please answer that.
So when you talk about the asset, it's obviously a district scale. It's 144 square kilometers, right now 55 square miles. It's a very high-grade series of deposits, so there's a lot of opportunity for expansion, good jurisdiction. And we also, from an investor point of view, having permits in hand. When we bought this asset, it came with a permit. We can start the Sterling mine up if we want to. And so from a risk-reward scenario, there's not a lot of chance that this is going to blow up and have a fatal flaw and go to zero. We have a business model that if exploration is not being rewarded, we have a mine that we can go with. There is no stale date on that permit, and so we have an opportunity or a backstop of value within the company that there's a business plan with it. And that's again part of the thesis of the management team, that we are men with a business plan. Going forward, just as a comparison, the blocks are ours. These are Western U.S. gold assets. Average for heap leach projects is about 0.8 grams per ton gold. If you look at ours, everything is in the upper quartile where you want to be. And obviously the Sterling mine itself, which is permitted, is the highest of the bunch. It is an exceptional deposit, permitted for production in Nevada. It hits very hard economically. Assessing the technical risk, that this is part of the matrix that Doug and I looked at when we were evaluating projects. Obviously the jurisdiction, we technically are more comfortable with open pit projects, so that was where we wanted to go. The run of mine versus crushing, it's not so much of a technical risk, but it's a capital risk. If you have to put in a crusher or a mill, there's a lot of capital involved. What happens with the Sterling, you blast the rock, you get it down to a 24-inch minus particle, you put it onto the leach pad, and then you literally put on soaker hoses and you can start to gather the gold out of it. So that leads to less capital intensity and gives you that combination of upper quartile grade and lower quartile costs, which makes for a very attractive project. Not the best showing of the light here, but this is what the permitted Sterling mine looks like, and where you get an idea of how this asset will perform based on its history. This here is a historical leach pad that was in operation from the 1970s to the 2000s. They put 1 million tons of rock onto that leach pad, and they recovered 88% of the gold within 30 days of it being placed. So it's a very fast leach cycle. Again, 24-inch miners. There's no mills, there's no tailing ponds, there's none of that. That's the processing facility right there where the gold is. So the solutions come out of the pad into these ponds and into this building, and the gold is recovered. Very simple.